Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Department of Trade and Industry wants 200 million pesos a year to back Philippine exporters as global trade gets tougher. A big tax cut hits the PSE next month as the stock transaction tax drops to just 0.1%. Israel strikes Iran, targeting nuclear and missile sites in a sharp escalation. And a U.S. senator is taken down and handcuffed as he tried to ask a question during a Homeland Security news briefing in Los Angeles. Let's check on how global markets moved overnight as investors reacted to fresh inflation data and geopolitical developments. Wall Street closed higher, boosted by a cooler than expected consumer price index and a positive reading on producer prices. U.S. stocks also found support from progress in tariff talks with China, easing some trade war concerns.
Overall, the market today and my outlook for the next few months is that there will be continued volatility. The markets reacted very favorably to developments in tariff negotiations with China, as it should. But I think it's important that we remember that the outcome of the meetings in London and the initial discussions in Geneva are very short-term focused. They're 90-day focused, and they're very targeted. So we don't really know what the long-term implications will be on tariff policy with China. And that is something that we should be keeping an eye on.
The Dow Jones Industrial Average and the Nasdaq both gained 0.2%, while the S&P 500 rose 0.4%, lifted by strong guidance from Oracle, which fueled renewed hype over artificial intelligence. Gains came despite pressure from Middle East tensions and a slide in Boeing shares. Over in Europe, markets there closed mixed. The UK's FTSE 100 higher by 0.2%. Germany's DAX lost 0.7%, and France's CAC 40 slipped 0.1%. The Philippines slips to 20th in the World Economic Forum's Global Gender Gap Index, losing ground in a key metric closely watched by investors and multinationals looking for inclusive, equitable economies. The index measures how countries are closing gender gaps in 4 areas: economic participation, education, health, and political empowerment. The Philippines scored 78.1% this year, which is a slight improvement from 2024, but not enough to keep pace with global competitors. This marks the 6th straight year the country has missed the top 10, a red flag for companies prioritizing diversity in leadership and workforce inclusion. Still, the Philippines ranks 3rd in East Asia and the Pacific after New Zealand and Australia, reinforcing its potential as a regional hub for women-led growth. The Agriculture Department is pushing for a gradual rise in rice tariffs starting in the 3rd quarter to avoid shocking retail prices and stirring inflation headaches. The DA says timing is key. Hikes must protect local farmers without hurting consumers. Secretary Francisco Tu Laurel Jr. wants the increase to coincide with harvest seasons in Vietnam and Pakistan, the Philippines' biggest suppliers, to soften the blow on both local and global prices. Vietnam harvests in September, Pakistan in December, crucial windows that could ease supply pressure as duties climb. Starting in July, imported premium rice will be cheaper as the government moves aggressively to contain inflation that's squeezing household and business margins. Agriculture spokesperson Arnel de Mesa says prices may drop from 45 to 43 pesos per kilo, with ripple effects expected across other variants like sulit rice and the Rice for All program.
Normally, 1 to 2 pesos ang ibababa. Mga ganong range din. Pag sinimulan mo kasi dun sa MSRP, eventually lahat yun susunod. Hindi pwede kasing nagbago ka dun sa MSRP ng premium imported, yung iba hindi gagalaw.
To further cool food inflation, a pork price cap will be reimposed in July, while officials weigh suspending a biofuel hike to hold off diesel increases. For businesses, these moves could ease pressure on operating costs from food manufacturers to logistics firms and stabilize consumer demand in a sensitive economic environment. The Department of Trade and Industry makes a big ask, at least 200 million pesos a year, to keep Filipino exporters in the game as global trade gets tougher. The Export Marketing Bureau says the funding will replace the EU-funded Arise Plus Philippines program set to end this year, which has helped local firms upgrade, certify, and go global. Speaking at a forum on the U.S.-China tariff war, Director Pearl Cignal said export targets under the 2023 to 2028 plan are being revised to reflect a sharper, more competitive landscape. For Philippine businesses, this funding could be the difference between staying export ready or falling behind as markets shift and supply chains remain on edge. Elsewhere, Israel launches what it calls preemptive strikes on Iran, escalating tensions in a region crucial to global energy and trade. Iranian state media reports multiple explosions in Tehran, prompting a temporary closure of airspace over the capital. The targets Iran's nuclear facilities and long-range missile sites, according to sources familiar with the strikes. Israel has declared a nationwide state of emergency, shutting schools and workplaces as it braces for possible retaliation. For global markets, this marks a major flashpoint that could roil oil supply, shipping routes, and investor sentiment in the Middle East. Filipinos are being urged to avoid non-essential travel to Iraq as Middle East tensions flare and security risks escalate. The Philippine Embassy in Baghdad issued a strong advisory warning of a prevailing security situation and urging Filipinos on the ground to stay vigilant and to avoid crowded areas. This comes as the United States begins a partial evacuation of personnel from Iraq amid fears of a wider conflict. Reports indicate Israel may be planning to strike on Iran, prompting Tehran to threaten U.S. bases across the region. The standoff is unfolding just days before high-stakes U.S.-Iran talks set for June 15 in Oman, with global oil, security, and trade hanging in the balance. From global security to cybersecurity, telco giants here at home are sounding the alarm over the Konektadong Pinoy bill, now awaiting President Marcos's signature. The bill seeks to expand internet access by allowing more players into the sector without needing franchise or traditional regulatory permits. Supporters argue it will break monopolies and fast-track digital inclusion, especially in the rural areas. But incumbent operators say it gives newcomers a free ride, avoiding the costs, compliance, and infrastructure burden long borne by the telco veterans. Industry stakeholders are urging Malacanang to review the bill closely and set clear guardrails to ensure fair play, data security, and lasting connectivity for Filipinos. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Friday morning. This morning, the Nikkei 225 is in the red, down by 1%. Hong Kong's Hang Seng Index is flat with an upward bias. Shanghai's Composite in the red, lower by 0.3%. And Singapore's Straits Times Index in the red, down by 0.4%. Now, here at home, Philippine financial markets were closed yesterday in observance of Independence Day. As of 10:14 this morning, the main gauge is in the green, up by 0.5% to 64.13. The broader all shares index in the green as well, up by 0.4% to 37.90. As for the sub-indexes, we're seeing a mixed picture here. The financials, industrial, services, and mining and oil counters are lifting the market, whereas the holding firms and property counters are limiting the market's upside. We've got total volume traded at 143 million shares. Value is at over 2 billion pesos in early trade. Advancers, market breadth is positive. We've got 67 advancers, 58 decliners, while 48 stocks remain unchanged. Now, at the currency market, the peso opened slightly stronger at 55.80 to the dollar, up from its previous close of 55.89. Now, the Philippine Stock Exchange will implement a lower stock transaction tax starting next month in moves seen to boost market participation and trading liquidity. PSE President and CEO Ramon Monzon says the reduction follows the signing of the Capital Markets Efficiency Promoting Act, or CEMEPA. Under the law, the stock transaction tax will win on the global financial stage, formally dropped from the European Commission's money laundering watch list. The move marks a vote of confidence in the country's reforms and is expected to spur growth in banking, remittances, and digital finance by easing compliance risks for global partners. Sujin Kim has the details.
The Philippines is officially out of the European Commission's dirty money watch list. The EU's executive body confirmed that the country is no longer considered a high-risk jurisdiction for money laundering and financial crimes, citing significant progress in strengthening its legal and regulatory framework. The EU said the update reflects alignment with the recommendations of the Financial Action Task Force, the global standard-setting body for anti-money laundering. The delisting is seen as a strong signal to the global market and is expected to deliver immediate gains to key sectors, leading the beneficiaries, the Philippine banking industry. Industry analysts say this will improve coordination between local banks and European counterparts and help unlock funding and investment flows previously constrained by regulatory red flags. Another winner, the Philippines' vast remittance network.
The Philippines is being one of the top global remittance recipients in the world, and this move will actually help preserve and improve banking corridors between the EU and the Philippines, ensuring that our OFW sending money from Europe do not really face disruptions, delays, or even increased transaction costs.
Also expected to benefit fintech companies including e-wallets, digital lenders, and payment platforms, which have struggled with heightened due diligence from international partners. Amid the celebration, the Securities and Exchange Commission vowed to sustain momentum in cracking down on illicit financial activities.
I will leave no stone unturned for SEC to contribute what it should be contributing towards the on the AMLAC our program. Ganun lang naman yun. Everybody should do its job. As simple as that.
The newly minted SEC chief also called for stronger enforcement under his leadership.
Enforcement should be the key rather than exemption from enforcement. For example, there are these exemptive reliefs from SEC rules. While the SEC has the power to grant exemptive relief, meaning to say exempt from the complying with the provisions, for me, the exemptive relief will be really the exception rather than the rule. It will be far in between.
Bangko Sentral Governor Eli Remolona Jr. welcomed the EU's decision but noted that it still requires a final yes from the European Parliament. Still, economists warn that the country must remain vigilant as new threats could put it back on the watch list.
Well, relisting is always possible because of the evolving landscape of the financial market. Second, triggers could be POGO migrations or even the resurgence of POGO. There might be a regulatory loophole or return of illegal operators, especially those involved in illegal operations, money laundering, which can trigger or raise red flags among EU regulators.
Rivera added that the rise of AI-driven fraud and unmonitored crypto platforms could pose fresh compliance risks if not immediately addressed. Sujin Kim, Bilyonaryo News Channel.
With that major tax cut taking effect on July 1, slashing the stock transaction tax under the Capital Markets Efficiency Promoting Act, or CEMEPA, many are asking, will it be enough to re-energize trading, attract foreign capital, and bring the Philippines Stock Exchange closer to its ASEAN counterparts? Joining us now to weigh in on this is RCBC's chief economist, Michael Ricafort. He's here to talk about market reaction, investor confidence, and what this signals for the broader investment climate. Hi, Mike.
Hi, good morning, Mike, and to your viewers. Nice to be back.
Good to have you, Mike. Mike, with the implementation of CEMEPA, or the Capital Markets Efficiency Promotion Act, the stock transaction tax drops from 0.6% to just 1/10, almost zero. From an economist's perspective, just how big of a deal is this? And will it be enough to spark real momentum in our capital markets, or is it just one piece of a bigger puzzle?
Well, it could be the latter. It's although it's a step in the right direction. Almost no tax, 0.1%. And it's a savings of zero point 0.5 from zero point 0.6. So, the big funds, it's really meant to attract more international funds in the billions of pesos or dollars. And, this is well, it's like a savings for them outright. It's like a gain of zero point 0.5. That's on the stock transaction tax alone.
Yeah.
And on top of that, there's also reduced documentary stamp tax from 1% to 0.75 on other transactions, especially new issuances. So, combining the two, that's easily a windfall of 0.75. And that's a big deal. It's hard to earn that much for really huge funds. You're talking about pension funds, retirement funds, trust funds, wealth funds, insurance companies from all over the world. So that hopefully this would increase the volumes in the local stock market. Since this would start in July, let's see in the coming months if indeed this is enough to increase liquidity, because that's very important to have the big funds with their big buy and sell transactions, for them to have better price discovery, to have narrower spreads. They have greater flexibility to invest into the Philippines and nimble enough also to take profit. So
Yeah.
we'll see if the liquidity would eventually also be bolstered.
Yeah, you'll need to be able to put in and take out with ease. On another front, Mike, the Philippines is now off the E-watch list. We're also off the FATF gray list, and we maintain an A- rating with the Japan Credit Rating Agency. How significant is this trifecta for investor confidence? And could it translate to lower borrowing costs, more capital inflows, and stronger remittance channels?
Well, this is all steps in the right direction, Mikey. First is the reform measures with the CIMEPA. Then a few months ago, we have the Create More on the FDI side for foreign direct investments. And now, the removal from the watch list of the EU of the Philippines. Well, this doesn't come as a surprise. It's like 2 to 3 months since the FATF also removed the Philippines from the watch list. So that's a good signaling from the point of view of foreign investors, because global investors and regulators are keen on these factors, especially now that investments around the world are encouraged by both international and local regulators for investors to patronize countries, companies, businesses, and other institutions, other issuers that comply with ESG standards, meaning standards that are friendly to the environment, friendly to society or social, and good governance, because this is a good signal on stronger institutions, good governance. But what triggered this positive development on the removal of the Philippines from the watch list when it comes to from the point of view of FATF 3 months ago, and from the point of view of the EU? So, the proximate cause has been the ban on the POGO. So, meaning to say, the Philippines is moving towards that direction. So, it's not really about the money. Well, it's really governance. So, if indeed, that sends a very good signal, because global funds are becoming more ethical and more inclined on the ESG standards. So, that's part of their criteria, among many other things. And, the credit rating agencies, that's, again, another positive factor. The affirmation by Japan's Japan Credit Rating Agency of the A-. It has been there for 5 years already, since, it started at the height of the pandemic. And, the other Japanese credit rating agency, R&I, also A-. And even the Western credit rating agencies, S&P, now at BBB+, that's we already have a positive outlook since November 26. So this is also the one of the main scorecards used by global investors and creditors for the Philippines before they put in billions of pesos and dollars into the country, into the financial markets, and before lenders also provide credit to the country, to the government. They look at this. This single scorecard.
And Mike, going back to the SEMEPA, it includes a cut in documentary stamp tax, added incentives like retirement, contribution deductions. This is all aimed at beefing up the capital markets over time. When do you think we'll start feeling the full impact of these reforms?
Well, we'll see. It's July 1. It's not that far. It's a little over 2 weeks from now, and well, in the coming months, we'll see if in the latter part of the year if there would be tangible effects already on this, because But there are other things to consider. But at least the important thing is the reform measures are moving. SEMEPA, create more. To create an environment that's conducive for business, for investments to come in, create jobs, create more opportunities. That's the job of the government, to come up with more reform measures. And of course, we have to balance this with the fact that, recently there are noises, and question is, would there be some distractions? But hopefully not, because, SEMEPA has been pending for even before the pandemic, and finally it's passed. So despite all the political noises, even since late last year, so this is good signaling again for the country. And going forward, of course, it's going back to the basics. Well, of course, stronger rule of law, stronger institutions of law, and of course, it's important that openly political noises would just be noises.
Yeah, Mike, exactly on that. Political noise and the rule of law. The House and the Senate remain deadlocked on how to move forward with the possible impeachment of Vice President Sara Duterte. How do you assess this political noise as an economist? Is it scaring away investors at this level?
Well, this is part of democracy. It's part of the democratic processes that's expected. What's really important is that there won't be risk of destabilization, and there's no risk to the duly elected government, especially on the presidency. That's the most important thing, and the democratic processes are respected. So that's the bottom line. And it's better to have no political noises, definitely. On top of that, even before the billions of pesos and dollars, before they're invested here in our financial markets, in the stock markets, as well as in the FDIs coming in. Part of the consideration also, of course, on top of the favorable credit ratings, that's 1 to 3 notches above the minimum investment grade, and they're also looking at other geopolitical risks, such as the territorial disputes between China and the Philippines. Because, bottom line, they're here to make money. That's the reality about it. And, better if there are no political noises, better if there are no tensions on, especially, particularly, the territorial disputes between the Philippines and China. Because, key question, before they come here to the Philippines in a big way, they would assess, of course, would they make money, the costs involved, and some risk. Would there be a risk of war? So it's a holistic approach. But generally, as long as they all balance out these positive developments on the reform measures, the fundamentals of the country, the profitability, the valuations. It's a timing issue also, Mikey, in the coming months. PSE has been stuck in a range of 6,000 to 7,000 for 13 years on a year-end basis. And, we're kind of near the lower end. We're about 6,300. So, timing-wise, if they would like to come in here in a bigger way, so, it's an
favorable. Attractive level because we haven't really budged in the last 13 years. Now, Mike, talking about monetary policy, the Bangko Central's Monetary Board is going to be meeting on June 19th next week to talk about interest rates. Do you think that a 25 basis point cut is warranted at this point, especially with May inflation coming in so low at 1.3%?
Yeah, very much possible, Mikey. It's the third straight month that inflation it's below the target range of 2 to 4% set by the BSP. So meaning to say, if it's below 2%, the lower end, so there's a need to bring it back there. But there are other factors like the high base effects. But nonetheless, they all have the monetary authorities. They have all the leeway. They have all the flexibility, the room to maneuver, and cut rates, and well, from 5.5 to 5.25, effectively bringing the spread to, or the differential with the U.S. at
Very narrow.
0.75. Yeah, that's
Yeah.
the narrowest ever. 2 years ago, that's the last time. So it's well, so they can do that. And for the coming months, after that, after June 19 on the possible cut, quarter point cut, it would be now largely a function of future Fed rate cuts because other central banks are doing the same. They're maintaining healthy interest rate differentials. But nonetheless, it sends a signal that the priority still is how to spur greater economic growth by way of monetary easing, lower credit costs, lower borrowing costs brought about by this monetary easing and
Yeah.
rate cuts.
And
So,
Mike,
yeah.
We don't have that much time. Can you give us a snapshot of how you think the economic situation is going to look as we approach the second half of the year in terms of GDP, inflation, interest rates? How much of an easing cycle? How deep might this easing cycle be? And what's the impact going to be on the peso and on the stock market? Can you give us your your outlook for the second half across the board?
Well, GDP still close to 6%. It's still among the fastest in ASEAN and Asia, nonetheless. Yeah, largely because of the external factor brought about by higher U.S. tariffs and the trade wars, because of the uncertainties on exports and this capacity. There's inventories being managed and investments are on the sidelines. Wait and see. So that's number one. So how would it impact? Relatively softer economic conditions worldwide would warrant further cuts in rates worldwide also, starting with the Fed. It has been signaled by Fed officials through the dot plot in recent months and also by the Fed Fund futures. Possible cut, two Fed rate cuts of 0.25 each. So that would be 0.5. That's also consistent with the recent signals locally in recent weeks. Possible additional 50 basis points cut in local policy rate from the current 5%. Eventually, it's going to go to 5%. Estimate for the exchange rate, it has been fairly stable now at 55 levels. So towards the end of the year, so familiar levels at 55 levels possibly a range of 55.50 to 56.50. But it would largely be a function of the weaker dollar. The dollar's already at the lowest in 8.5 months in the region in Asia, and the lowest in 3 years versus the euro. So whenever the Fed cuts rate, so the tendency is for the dollar to correct lower because it's retracing what has happened over the past 3 years. When rates were higher, dollar went up. Now Fed rates are going down, dollar is correcting lower. So that's the part of the economic cycles. And for the index, it's possible still to move towards 7,000 because hopefully we've seen the worst already in Trump's tariffs, and that has been the view that it's taco. Trump always chickens out, and there's a possibility that the threats may be eventually there may be compromises in a positive way, and we have seen the worst already, more than a month ago when at the height of the U.S.-China tensions, when tariff set by the U.S. was 145%. On Chinese imports. Now it's down to 30%, and the negotiations are still ongoing. There's possibly the only thing that we have, only risk factor came out a few minutes ago. There's in the Middle East the the Israel's attack on Iran's nuclear facility, because there were threats about 1 to 2 days ago that possible retaliation by Iran, signaling that there's a risk for them to retaliate and attack U.S. bases in the region. So that has been signaled by the Trump administration in assessing the security risk also in the Middle East, as far as the U.S. personnel are concerned. So oil suddenly spiked to $73 per barrel for the NYMEX, coming from from 63, 64. It's up by almost $10. So that could be a consideration on, say, the policy.
Lots of things to take into stock. Yeah, but thank you. Thank you, Mike, for giving us a clearer picture of what's ahead.
Thank you so much, Maiki, and your viewers.
All right. Thank you, Mike Rickerford, Chief Economist of RCBC. Now we're taking a short break. Business 360 will be right back. Welcome back. A new era of consumer protection begins on June 25th as the Philippines enforces a landmark law aimed at combating digital fraud. Banks and e-wallet providers will now be held to higher standards with stricter rules for detecting, preventing, and responding to online scams. Sujin Kim has the details.
As the European Commission removed the Philippines from its list of high-risk countries for money laundering, the nation is intensifying its fight against financial crimes. In a landmark move, the Bangko Sentral ng Pilipinas released the implementing rules for the Anti-Financial Account Scamming Act, or AFASA, a law designed to strengthen consumer protection and combat the surge of digital fraud. According to BSP Deputy Governor Elmore Capule, the law not only punishes scammers, but also holds banks and e-wallet providers accountable for safeguarding customer funds. The first reform: banks must install advanced detection systems including behavioral analytics, geolocation tracking, and real-time alerts.
It's very, very expensive. That's the reality. So we are giving them sufficient time. But at the same time, we realize that if they will not adapt to this, then we cannot really solve these scamming, these frauds. No? So it's a calibrated approach.
The BSP clarified that compliance depends on a bank's size and transaction volume.
In terms of like, if you're a very simple bank, a very low many EPF is, so you don't have to have that sophisticated fraud management solution that will cost like more than the value of what you're getting from digital transactions. So yeah, so we try to balance in terms of the requirements, and so we have qualified now those that are required to have the sophisticated fraud management system, so those with complex TPFs and also with high aggregate value of digital transactions, which is initially set at 75 million monthly.
Second, once a customer reports being scammed, the bank can immediately freeze the funds under dispute. Third, the BSP now has authority to order the opening of suspicious accounts involved in fraud without needing a court order. All banks, e-wallets, and payment operators have until June 2026 to fully implement these new fraud prevention systems. For the first time, financial institutions themselves may be sanctioned for failures in consumer protection.
It entail appropriate sanctions. A violation of the FASA will entail not only administrative, possibly criminal. And if you look at the penalties that the BSP can impose, in 2019, our charter was amended and the power to impose penalties has increased tremendously.
The BSP can impose a penalty 3 times the gain from any violation.
Earn 1 million by violating this, we can impose 3 million penalty. That's on top of the usual 100,000 a day. So we have a lot of penalties. So I don't think it will be to the advantage of the bank to violate.
Under AFASA, the era of buyer beware is over. The burden now falls on financial service providers to invest in modern technology and prevent scams before they happen. Sujin Kim, Bilyonaryo News Channel.
A political analyst sees the Senate's move to remand the impeachment back to the House has less to do with law and more to do with the 2028 elections. Of the 5 senators who oppose the move, Binay, Po, and Pimentel are exiting the Senate, while Ontiveros and Gatchalian have hit their term limits. According to political science professor Eric De Torres, that freed them to vote without political consequences. Meanwhile, the 18 senators who backed the motion are all seen as potential re-electionists in 2028.
Naglalaro talaga. Iwas pusoy kasi talagang napakasensitibo itong issue na to politically for that matter. Secondly, ang nakakagulat yung overwhelming vote ng 18-5. Nobody would like to really be at the forefront of this issue, especially if you're a re-electionist for 2028.
With the Senate voting to remand the articles of impeachment back to the House, questions continue to swirl over whether the move is constitutionally sound. 2 framers of the 19 meanwhile calls the move unique but permissible. Now, a third constitutionalist weighs in. Speaking to BNC's Agenda, attorney Rene Sarmiento says the remand is legally allowable, arguing it's part of the Senate's power to shape procedure.
Ito ba ay pwedeng ibalik sa Kongreso, sa House of Representatives? Sa ngayon po, may jurisdiction po, Corina, ay ang ating Senate. Yan po ang itinakda ng ating saligang batas. Since it has the sole power to try and decide, para sa akin po, pwede pong the situation is permissible to remand. They can act on unique procedures and incidental motions. Kaya para sa akin po, para po ito po ay tuloy-tuloy na at hindi mahinto, hindi umabot sa Korte Suprema, the House of Representatives should act on the two issues raised in the motion to remand. Although, ang masasabi ko po, Corina, with all these incidents going on, developments, the sacred constitutional command, forfeit proceedings should always be in the mind of our senators and congressmen.
On another front, expelled lawmaker Arnolfo Teves Jr. transfers from the NBI Detention Center to the Manila City Jail in Camp Bagong Diwa after court rejects his bid to stay under NBI custody. Teves faces multiple charges, including murder, and was deported from Timor-Leste last May, 2 years after allegedly orchestrating the assassination of Negros Oriental Governor Roel Degamo. His widow, Congresswoman Janice Degamo, praises the move, saying it sends a message that Teves should be treated like any other accused. But his lawyer, attorney Ferdinand Topacio, slams the court's order, arguing it violates multiple laws. They're now seeking legal remedies to have Teves returned to NBI custody.
The fact that it was Branch 12 who first issued the commitment order and that there is a pending motion there, as well as a motion for reconsideration na final namin sa Branch 51. Pagkalabas ng order niya, should have put Branch 51 on the alert na hindi muna dapat i-implement yung order niya. Ang problema po dyan sa Branch 51, mukhang nagiging sunod-sunuran ang korte doon sa gusto ng private complainant, which should not be the case.
We're taking a quick breather. Business 360 will be right back. Welcome back. Air India's CEO breaks his silence after one of the deadliest aviation disasters in years, a tragedy now under global scrutiny. Campbell Wilson confirms over 200 people died when a Boeing 787 Dreamliner crashed in Ahmedabad shortly after takeoff. He says the investigation will take time, adding that support teams and helplines have been deployed to aid the families of the victims.
We understand that people are eager for information. Please know that we will continue to share accurate and timely information as soon as we can. But anything we report must be accurate and not speculative. We owe that to everyone involved. For now, our teams are working around the clock to support passengers, crew, and their families, as well as investigators, however we can. Thank you.
The flight headed for London had passengers from India, the UK, Portugal, and Canada. The jet went down in a densely populated neighborhood, with at least one survivor recalling a loud noise just seconds after takeoff. The incident is now under intense scrutiny from global regulators, insurers, and airlines as questions mount over safety and accountability. U.S. officials say there's no immediate need to ground Boeing 787 planes following the deadly Air India crash that killed over 200 people. Transportation Secretary Sean Duffy and acting FAA Chief Chris Rochalu made the statement at a news conference, stressing that safety remains their top priority. They confirmed a team is being deployed to India and that more resources could follow, depending on what investigators find.
This is very early in the investigation, and so it's not appropriate for speculation at this time on what could have caused the investigation. As the Secretary said, we will let the facts lead us, and we will support the NTSB investigation and, of course, the Indian investigation as well, the their version of NTSB.
Democratic U.S. Senator Alex Padilla is forced to the ground and handcuffed after trying to ask a question during a press conference by Homeland Security Secretary Kristi Noem. The incident, caught on video and posted online, shows security escorting Padilla out of the room as he shouts questions about the Trump administration's migrant crackdown. The event took place in Los Angeles, a city gripped by protests as National Guard troops and U.S. Marines are deployed to restore order. In a statement, Homeland Security accuses Padilla of disrespectful political theater, defending the actions of the security forces.
I came to the press conference to hear what she had to say, to see if I could learn any new additional information. And at one point, I had a question. And let me emphasize, just as we've emphasized the right for people to peacefully protest and to stand up for their First Amendment rights, for our fundamental rights. I was there peacefully. At one point, I had a question. And so I began to ask a question. I was almost immediately forcibly removed from the room. I was forced to the ground, and I was handcuffed. I was not arrested. I was not detained.
U.S. Treasury Secretary Scott Bessent says trade ties with China could rebalance if Beijing opens up more market access for American goods. Now, testifying before the Senate Finance Committee, Bessent stressed that President Donald Trump is focused on boosting U.S. manufacturing and shrinking the trade deficit. He also confirmed that U.S. and Chinese negotiators who met in London this week did not discuss TikTok. This despite a looming June 19 deadline for ByteDance to sell the popular short video app or face a forced shutdown in the United States.
Senator, President Trump would like the U.S. economy to rebalance toward greater manufacturing, bring down the trade deficit. The Chinese continue to add manufacturing capacity. Currently, they are 30% of global capacity, up substantially since 2020 under the cover of COVID. So if they are willing to be good partners and approach a negotiation where the U.S. brings back manufacturing, precision manufacturing, high-paying jobs, and the Chinese are willing to open their economy to American products, then we could do that together. But there's a lot of wood to chop there, sir.
U.S. President Donald Trump threatens to hike auto tariffs once again in a bid to force automakers to ramp up production and investment on American soil. Trump's 25% tariffs on imported cars remain a major pain point for the industry, and global manufacturers have been lobbying hard for relief. But the White House shows no signs of backing down. The Detroit 3, Ford, GM, and Stellantis are now slamming a new deal that lowers tariffs on British car imports while leaving out vehicles made in Canada and Mexico. For global automakers and suppliers, this escalation could mean fresh uncertainty in cross-border supply chains, trade routes, and investment plans.
But to further defend our auto workers, I imposed this 25% tariff on all foreign automobiles and investment in American manufacturing and auto manufacturing. All manufacturing is surging. And I might go up with that tariff in the not too distant future. The higher you go, the more likely it is they build a plant here.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel, and have a good weekend.